Asking you to unmute. Welcome to Face, Tony Greer.
How are you guys?
Good, buddy. I read about you. You had quite a journey as a trader, and I remember I dreamed of having a job with J. Aaron and Company. They were such a boutique, top of the line commodity operation. You were fortunate early on in your career to be surrounded by pros.
I really was. Through my
Also,
market.
before we get going, Tony, if you want to share, are you going to share your screen today and show us anything, or just talk?
I was just going to talk only because this is my first time doing with you guys. I can be on video if you want to look at me. You know what I mean?
Like, no, that's okay. I thought we might talk about markets, but let's talk about your journey, and next time we'll get into
Dale. Let's promote Tony, so at least he can share his camera since he wants.
Okay. I did promote him.
In order for him to,
he's a panelist,
to share his camera, I think he needs to be a co-host. That's why I'm telling you.
Okay.
So promote him to co-host.
Okay. I'm making you a co-host.
And then he can
go ahead, Tony.
Camera.
You could use your video camera now.
All right, let me see here. There
Steve's
we go.
My producer. All right, there you are, Tony. So is that your pandemic look?
Yeah. Let me just put let me put all these white screens down on my. Can you hear me? Okay.
Yeah, can hear you.
All right, great. I can talk about whatever you want. It doesn't necessarily have to be me. I have a strong view on the dollar. I know that you're an FX technical, basically, entity that's, sharing stories like that. So,
we cover everything. We cover everything. So you have a strong view. Are you a raging bear?
No, it's more in the dollar. I call it a lasting dollar bull, right? It's hard to shake me off of being a dollar bull because I just believe in that we're still the best center for investment on the globe, right? Our economy is stronger than the other economies. Our currency should therefore remain the reserve currency, and I don't think that there's any danger of that changing. While the dollar may fluctuate and trade, from dollar index 90 to 110 within that range or something like that, to me, that's not really dollar moving. I can use that as a barometer or an indicator for what it means to other markets. But for me, a 5 or 10% move in the dollar is just something that's indicative of something else going on. So that's kind of how I posture it.
Okay, the range bound, is that central planners keeping things in a range? That's their intention, to reduce volatility, take the currency markets away from traders?
Well,
what do you think?
It seems very much certainly, Dale, that since 2008, since we and then the rest of the world embarked on this hardcore QE plan, that we've been sort of taking turns trashing each other's currency, if that's fair to say. Yeah. So I do believe at some level that it could be, I try not to be too conspiratorial, but it could be somewhat by design that you don't see a runaway train in one currency strengthening versus the other currencies, right? It's just a sort of, consistent amalgamation of currencies weakening against gold and precious metals and things like that. Yeah.
Okay. You think Powell is going to have some dollar moving news talking about raising the inflation target? I don't know about you, Tony, but I think they're setting this up because they know it's going to happen anyway, and then they could say they planned it, higher inflation. What do you think?
That's a very interesting way of looking at it, Dale. I've been writing, just recently, as the Bloomberg Commodities Index has picked up with this rally in precious metals and the rally in energy. I've been saying, this time around, it looks like we're going to see some serious headline inflation. And it seems like it would make sense given the size and scope of the balance sheet ad the Federal Reserve just had. So, yeah, I'm kind of thinking that we're going to see it. And if they're going to presage it by saying we're expecting it, then yeah, it sets them up pretty nicely to be ripe for a change if they know that it's coming, right?
I think you should be on CNBC because you have one of the nicest workstations, office, nice, more professional looking than a lot of these guys on Fast Money and everything. And getting back to the dollar, you know, the bulls have an argument about dollar shortages. That, you know, there's so much dollar denominated debt, there's not enough dollars to service it. It could end up creating a squeeze in the dollar during some type of major risk off, or maybe that's going to be the cause of risk off, emerging market economies that have all their debt denominated in dollars. What do you think of that narrative about a dollar shortage?
I respect that narrative. It's not my narrative, but it's out there, and I certainly hear it coming from well-respected voices in the foreign exchange market. So I do very much respect that. I can't say that I found direct evidence of the dollar shortage. I do understand that there's so much dollar-denominated debt issued around the world that there should be a natural bid to the dollar. I don't, you know, I can't myself envision the mechanics behind a massive dollar short squeeze. Maybe that's a fault that I have. But like I'm consistently thinking that the dollar is range bound. I'm consistently thinking that it's sort of just either in favor or out of favor. And to me, it seems like, you know, given the biggest economy on the planet just had a massive, you know, we almost doubled the Federal Reserve's balance sheet. Obviously, we're taking on massive amounts of debt. To me, it kind of makes sense that the dollar got punched in the nose a little bit and had to, you know, take a 5 or 10% pullback. I don't think it's anything that is a secular developing trend, though.
Okay. When it comes to the Chinese, Tony, you know, everything is, we're like in a Cold War with them economically. And I've had guests that talk about using the dollar as a weapon by revaluing the dollar, that would be harder for China to cope with a revalued dollar rather than a weaker one. What do you think of that as far as using currency as a weapon?
Currency as a weapon is something that we can, you know, I don't think we've really seen, you know, in this landscape just yet, as you've said, Dale, with the Cold War certainly most obviously brewing between the U.S. and China. I think that it's something that's going to get even hotter as we get to or through the election, because I don't think that President Trump has levied his full response to them allowing the coronavirus to spread so widely around the world yet. So I think we're due for an even more intense Cold War, which does lead you, you know, which definitely does lead you to start saying to yourself as a trader, I should probably start thinking out of the box here in terms of what could go on between the US and China. And so that is something that I'm, you know, just watching as closely as you. If it's going to be the kind of thing where they start using the currency as a weapon, I don't think that they're going to find enough common ground where it's going to benefit both China or benefit China and hurt the US enough for that to be a realistic policy decision.
Okay. So are there any currencies that you favor in this environment? Talking about inflation, perhaps commodity currencies that could benefit from that, especially if things don't continue to unwind with China, perhaps the Aussie dollar, Kiwi, or Canadian?
Exactly. I'm more focused on, rather than Kiwi and Canadian, I'm more focused on the Aussie dollar and the euro as a commodity bull here. So as you've seen, Dale, since, you know, I would say, since let's call it the risk trough in March, you know, when the S&P finally bottomed as a result of the coronavirus lockdown, I would say since then, some of the trends that have been widely apparent since the Federal Reserve levied their response to the lockdown is that metals have begun rallying, right? Iron ore is trading at an all-time high, driving, you know, copper's begun rallying in significant proportions finally. This is clearly driving the Aussie dollar, and whether it is in the euro, whether it's driving the euro or the move in the dollar rather and against the euro is what's driving commodities, is what I think. Either way, you have to respect these moves, because the Aussie dollar, I mean, I talked to a lot of FX traders and they have all got Aussie dollar widow stories on the way up. You know, they all took a shot to short it on the way up based on the view that there would be commodity deflation due to the lockdown. And as you've seen, the Aussie dollar is bid only now in the inflationary side of the lockdown.
Right.
So I'm really respecting that, the move in the euro, more so in the Aussie, but also in the euro, they do look like short-term trend reversals that we just saw. So I want to respect that move, and I'm not going to be a pig-headed dollar bear, but I'm going to say, I'm going to continue to say the dollar could possibly back off here. I'm not going to, I don't want to stand in the way of what's obviously huge FX traffic coming through selling dollars. So so I do think that I want to keep a close eye on the Aussie and the euro. It looks like they could be major reversals in the rearview mirror. And if this commodity breakout and headline inflation story that I'm trying to track right now pans out, then I think that those could be reversals, and you could see euro and Aussie just keep going higher. And so that's clearly.
If that's the case, then your original thesis of 88 to 110, would 88 kind of be your bull bear line for things have really changed and it's not just a range bound scenario anymore?
Yeah, I'd have to look back at the chart, Dale, but I do definitely have an all bets are off level, which I try to have with every position that I have or view that I have in my mind or on my books, because as we all know, in 2020, nobody knows what's going to come up on the bingo card next. So yeah, I am going to absolutely, maybe re-question my view as a secular dollar sort of sideways to bullish attitude to something that I may have to change. But I really think that by the time we get down there, I mean, dollar sentiment is really negative right now. And I know that, historically, but as you know, Dale, from following the FX markets for so long, sentiment isn't enough in FX, right? With a stock that's got a 50 million share float, sentiment in a short position is enough to spike it, right?
Great point.
In the multiple trillion, gazillion dollar effects world, sentiment's just not enough. The flows are much more significant. So with sentiment already is historically negative now, you get the dollar index down to 88.90, and you're going to have, Giselle Bundchen wanting to get paid in euro again. You're going to have all kinds of crazy stuff going on. And I think that might finally be the bearish capitulation like we've seen in the past. So I kind of look for things to get so negative and so washed out, then all of a sudden, like we say, in this world of competitive devaluation, next thing you know, all of a sudden the European banks the European Central Bank will start amping up its quantitative easing, and then the euro will take a hit. So I see it as something that is potentially managed between the G10, again, without getting too conspiratorial about it.
Okay, so talking about bingo, we have the elections coming up. If we have a result. We know it's going to be contested. It's going to be the most dramatic attempt at a transition in power in my lifetime. And I'm wondering if you have any view. I've talked to people that said, stock market's going to be bullish no matter who wins the presidential election. Do you think that the presidential election is going to have consequences for dollar direction? And which, by who?
Man, that's a loaded for bear question. I would say, let me start with this. The election wise, I don't think that having Biden versus Trump in the White House is going to change the Federal Reserve's behavior. And if I have to look at it, I'm going to say that that's what's driving markets. I have to keep in mind that I'm a firm believer that President Trump did put a lot of pressure on Jerome Powell at some stage at some stage when Jerome took office, because Powell came in seemingly with a stiff upper lip looking to, sort of normalize things. And I think President Trump started pointing out that, with the balance sheet that was constantly expanding under President Obama, there's no way he was going to allow the balance sheet to get shrunk on his watch. So I think that was a political implication, but I don't think Joe Biden would be in any way. I mean, I don't know if he has the mental capacity to address what's going on in the stock market, but I don't think that he would be reversing Fed policy in any way. So I'll answer.
Yeah.
Go ahead. I'm sorry.
But now he's saying he will make the dollar stronger. He really pays attention to markets. That's what he's saying now, as if people are worried about it. I think stock market people are celebrating a weaker dollar. That's a tailwind for all assets. have you ever seen, Tony, markets be so basically, well, what's the word I'm looking for? There's no there's really no separation. Everything goes up together and down together, just in different magnitudes.
Well, I'm kind of a stock market scientist, Dale, and I'd argue that we're finally in a different phase right now. Right now, we are in the stock market wealth gap bifurcation phase like I've never seen before.
Right, the old economy, new economy. Yeah.
Yeah, because, for example, the NASDAQ is up 30% on the year. The Russell 2K is down 5% or something, right? So small cap companies are getting bludgeoned by this lockdown. And the big four, what we can call the lockdown companies in technology, are all thriving like they've never thrived before. So there is, that is one underneath a sort of story behind the story that, yes, while the Fed has expanded its balance sheet via QE, the stock market has largely been straight up into the right-hand side of your screen in a rally. So yeah, everything is going up, but in different proportions. As one thing that I would look out for is that the fossil fuel industry is utterly dead if Joe Biden gets elected. I mean, I feel like he wants to, take the whole entire country carbon neutral as quickly as he can. So I would fear for the fossil fuel stocks getting washed out to, utterly disastrous levels if he
Interesting. Yeah.
wins the presidency. But again, I think that it's the incumbent's election to lose, given the fact that I think the world actually recognizes that his response to the virus wasn't as bad as advertised in the media.
What do you think about the heartbeat we got in 10-year yields last week? The move from 50 to almost 70, and this pullback in yields to me looks corrective, and I actually think there's a shot for 120 or so in the 10-year. Doesn't that round counter to what Paul's saying, that we're not even thinking of raising rates? That maybe you go back as far as I do and remember a group called bond vigilantes. Are they coming back?
Man, we've been led to believe, Dale, that they've been left for dead somewhere, somewhere along the course of our career. And while I do not believe that that's the case, that they'll always be back at some level. Yeah, man. I mean, I'm watching the 10-year yield like a hawk, and the move higher to 75 basis points last week was in line with my view that we were going to see headline inflation and rates were going to have to ratchet higher because of it. In response, however, they just got body slammed again, so I'm concerned. And I'm not going to come out and tell you that I'm a big bond trader or bond risk taker. I use the bond market as the guide to my position and my views in the markets. I really do. I kind of respect it as a spectator rather than digging in and deciding that my view on interest rates is right and the bond market is wrong.
TLT just doesn't look that good to me right here, even this recovery. So, I just think it's probably the most contrarian trend idea out there, is that rates could go up. Tony, I'm sorry that I didn't have a full half an hour to work with you today. It's outstanding to talk to a guy that I could fire any question to and know that I'm going to get a great answer. And, that's really a pearl. Sentiment isn't enough to turn the currency market. I'd love to have you back again when we have more time, and when I have more time. And, once you have an interview with me, you become my trading warrior brother.
Amen, Dan. Well, that was really, really great to hear. I'm honored that you think that way. And I'm also widely available right here in this room, in this office for you whenever you would like to talk about markets again. I absolutely love being on.
And the best way for people to, follow you that see this and want more of Tony Greer?
Yeah, I'm editor of the Morning Navigator newsletter that I publish daily. You can find everything you need to know about me in terms of my background and product pricing on tgmacro.com.
tgmacro.com. And let me just check Tony's.
At TG Macro on Twitter.
TG Macro on Twitter. There's Tony. And I really appreciate you being with us today, buddy. And, we live in very interesting times, and it's great to have a dinosaur like you to hang out with for a while, I think. Even though I'm, I already have one leg in the tar pit. You're not there yet, so.
No way. No. The pleasure's mine, Dale. Thank you so much.
All right, everyone. That's Tony Greer. Good hunting the rest of the day. Remember, don't just count your pips, count your blessings. And I'll see everyone on Thursday. Thanks again, Tony. It was you opened my eyes, and I really love that line, especially for a counter trend trader. Sentiment isn't enough to turn currencies, by Tony Greer. All right. Thank you, Tony.
Have a good one, Dale.
All right. So that's going to be it, everyone.